All right, what's going on, guys? Chermane here. Today we're going to be covering Chermane's model. Okay, this is the model I'll be using in 2025 going forward. It's pretty much the same thing I've been doing, but everybody has been asking me, what is your model? What is your entry criteria? Can you explain your model? What are the rules for your model? So this is me describing my model, okay, step by step, rule-based, time-based, and whatnot. I gave it the name Chermane's model, not because I'm trying to rebrand or rename something that's already out there. I simply named it Chermane's model because this is how I will be trading. Okay, this is my model going forward. You can name it whatever you want. Okay, Chermane's model, here's the rules. I shared this on Twitter a couple weeks ago. My time window to find a setup is 10 a.m. to 11:30 a.m. New York time. Okay, I do not trade the opening range. I do not trade the first 30 minutes. Okay, that's just my personality. That's just my style. I always like the first 30 minutes to pass by without me. Okay, so 9:30 to 10 o'clock, that opening range, I let it trade, form its high and low, let it do its Judas swing, whatever it wants to do, and then I go in and find my setup after 10 a.m. up to 11:30 a.m. All right, I'm only looking for shorts if we're above the midnight open and only looking for longs if we're beneath it. We're going to look at examples of this in just a few minutes, but keep that in mind. Okay, I am only looking for shorts if we are above the midnight opening price. I'm only looking for longs if we're beneath it. All right, my entry must fit this criteria. Now, if we're beneath both the midnight open and the 8:30 open, that is a rich premium. Okay, we're really expensive on the day. You want to be shorting at those prices if it's logical to do so. Okay, any short opportunities above both these opening prices is classified as a tier 2 setup. Any short opportunities that's only above the midnight open is a tier 1 setup. Okay, and you flip everything for bullish scenarios. So it may sound confusing now, but I have visuals prepared. Here we go. Chermane's model, tier 1 bullish example. You have your, switch to this. You have your midnight opening price. Okay, this is the same illustration I shared on Twitter. Okay, the model is buying, only looking for buys beneath the midnight open, taking a partial at buy side. This level can be a new week opening gap. It could be a fair value gap. It could be a volume imbalance. It doesn't matter, okay? Taking a partial here, leaving a runner to the midnight open. Not looking for anything short, not looking to take any sells, okay? I'm looking to target the midnight opening price, taking partials here, leaving a small portion on for the midnight opening price. Tier 1 example because we're only beneath the midnight open. Let's scroll down. Here we go. Chermane's model, tier 2 bullish example. Same thing, all I did was slap on the 8:30 opening price. So here's your entry, any PD array of choice, okay? For you, that PD array may be a fair value gap, that PD array may be a breaker, okay? I don't need to see a short-term low taken out, market structure shift. I posted this on Twitter, a lot of people are saying this is the 2022 model. Okay, I don't need this price action to form, okay? I don't need a short-term high, I don't need a breaker formation, okay? I'm looking to buy anything, breaker, fair value gap, order block, volume imbalance, immediate rebalance, it doesn't matter, okay? Entry, any PD array of my choice, okay, or of your choice. If we're beneath the 8:30 open and the midnight open, that is a tier 2 example. We're really cheap on the day if you're able to get an entry here, okay? An entry here would be a tier 1 example because we're only beneath the midnight open. So any buys here would be tier 1. Buying here, which is even better if you can get it, is tier 2. Same rules for targeting, partial, could be liquidity, new week opening gap, fair value gap, etc. Leave a small portion on for the midnight runner, okay? Nearly 70% of the time, you'll see price retrade, retrade back to that opening price, midnight. All right, let's move on. All right, here. So Chermane's model, this is a tier 1 bearish example. Midnight opening price is beneath us. 10 a.m. What are we looking for? Longs? Nope. I'm only looking for shorts if we're above the midnight open. Why? 70% of the time, you're going to see us trade right back down either to that midnight opening price or in that direction, okay? Same logic, okay? It doesn't have to be a breaker. I don't need a short-term high. I don't need a market structure shift with the fair value gap. Okay, this can simply be whatever price action, doesn't matter to me. If the logic is there, that's likely to go lower, I'm taking that trade, whatever that price leg may look like. All right, entry, any PD array of choice. Let's just call it a fair value gap. We're going to look at real chart examples in a moment. Okay, take it lower, same thing. You'll have sell side, a new week opening gap, a fair value gap, consequent encroachment of a wick on a daily chart, whatever partial here. Okay, take something off, leave a small portion on for the midnight opening price. That's the model. Partial, leave the runner to the midnight open. Only looking for shorts above the midnight open. I don't care about buying anything long. I don't care if it rallies 100 handles without me. These are the rules. That's Chermane's model. Right here. All right, last example, tier 2 bearish example. Same thing as tier 1, except we're in a rich premium now because we're above that 8:30 opening price as well. Okay, so we're above the midnight open. We're above the 8:30 open. Our entry is here. That is a rich premium. You're selling at a really expensive price, which is what you want. You want to sell expensive things and get out at a low price. Entry, any PD array of choice. Partial, sell side, new week opening gap, whatever the case may be, or it can be a fixed risk to reward if you're something like a 2-to-1 trader, 3-to-1 fixed risk to reward trader. Okay, get your 2-to-1, leave the runner for the midnight open. Okay, if you're to short here, okay, find an entry here. That would be a tier 1 short because you're only shorting above the midnight open. Okay, that's a good short. Nothing wrong with that. Majority of your setups are going to be above the midnight open only. But if you're able to get in above the 8:30 and above the midnight, you're getting in at a great price. All right, now, I have more. These are charts here. This is good. So real chart examples, here we go. Where's your midnight opening price? Here. Are we beneath the midnight open and the 8:30 open? No, we're only beneath the midnight open. So this is a tier 1 bullish example. In this instance, the entry is a fair value gap, stop loss beneath the down close candle, and buy side. Okay, you can't leave a runner to the midnight open because it doesn't offer enough range. No big deal. Buy side is your target. Okay, not rocket science. Let's look at the next one. All right, so here we have a tier 2 bullish example. Where are we at the time of the entry? We're beneath the midnight open and beneath the 8:30 open. That is a really deep discounted buy. Okay, that's great. Entry here inside the fair value gap, stop loss beneath mean threshold of the order block. Okay, whatever PD array you like. Maybe you like this inversion fair value gap here. Okay, that's for you. Maybe you like the order block entry. That's for you. I'm just using the fair value gap as an example. Okay, entry, take a partial at buy side, terminus here, buy side. Can't leave a runner to the midnight open in this instance. Why? Because it doesn't offer enough range for profit taking. All right. And let's do this. Next example, tier 1 bearish example. Okay, this is an instance where you're leaving a runner to the midnight open. So this is tier 1. Why? Here's your 8:30 open. Here's your midnight open. In this example here, your entry is only above the midnight opening price. Okay, that's a great short. Nothing wrong with that. It pays. But the better shorts, the best shorts are above the 8:30 and midnight. Okay, I purposely didn't include this entry just so you can see the difference. This is a tier 1 bearish entry. This would be classified as a tier 2 because you're also above the 8:30 open. Okay, that fair value gap entry there. Tier 1 entry, short, stop loss above the high. Where's your partial? Sell side. Where are you leaving a runner to? The midnight open. That's your trade. Entry, partial if you want, exit. Better entry is anything up here above both opening prices if you can get that. All right. Next example, tier 2 bearish example. Tier 2 meaning we're above the 8:30 open and midnight open at the time of our entry. In this instance, we're using a bearish breaker. You have a high, low, higher high. Okay, you could short inside this breaker. You could short at the return to the breaker. Okay, doesn't matter. Trade down. Where's your partial? Sell side, relative equal lows. Then what? Leave a runner where? Midnight opening price. Bang. Entry. Entry. Partial. Midnight open. Runner. Okay. Beautiful. Now you may be asking, well, Chermane, what happens if price is just running away from the midnight open? Okay, there's going to be instances, okay, once every couple of weeks or so, you're going to have a really trending day. Okay, I am giving myself permission to still trade those days. What does that mean? Say the midnight opening price is here. What are the rules? I'm looking for shorts targeting the midnight open. But I have the skill set to be able to read the daily chart and understand if we're likely to have a trending day. I'm giving myself permission to take that buy and take it up and ride the trend higher. Okay, if I do this, my rules are I have to use half risk, half leverage. Okay, ideally, I want setups like this, shorting towards the midnight opening price. If I'm taking a setup away from the midnight open, I'm allowing myself to do that, but instead of using 10 contracts, maybe I use 5 or 6. Okay, I have to use reduced risk if I'm trading away from the midnight opening price, because ideally I want to take something going towards it. But a lot of times what you'll see is the days where we're really leaving the midnight opening price and the price is just not interested in coming back to it, those are the days that are really, really trending. Okay, so you can trade that. Okay, but for me, I'm using half leverage. I get a lot of questions. Why did you buy today when we're above the midnight opening price? I thought you're only looking for shorts. I can still buy in a trending market. Okay, the model is just a model. Think about it like the 2022 model or optimal trade entry or the silver bullet model. Okay, Asia ATM model. Those are all models. The market doesn't run based on that model. That's just what you use to get in. So preferably, I want to get in with this model, Chermane's model. But if I understand that the daily chart is really bullish, we're really trending, and we're not likely to see shorts even though we're above the midnight open, that's fine, no big deal. I'll just take the entry with half risk. Okay, so there you go. All right, so that's it. If you guys made money with this model, if you caught setups with this model, screenshot it, send it to me. I'd love to take a look at it, love to see what you guys do with it. I'll definitely be using this majority of 2025. Like I said, in the live streams, we'll be looking for these setups daily. And on trading days, I'll trade those as well, just with half risk. But Discord members, I'll see you all back in the live trading stream January 6th, 2025 at 9:30 a.m. Everybody else, I see you when I see you. All right, peace.